Right, let's take a look at your market news. Asian markets were mixed today. This as markets try to find direction following the confusion caused by US President Donald Trump's fiscal stimulus off on Twitter communication last night. The markets are pinning major hopes on a further fiscal plan to help stabilize the largest economy in the world. Now, over in Japan, the Nikkei share average ended the day up 1.09%. In Hong Kong, the Hang Seng Index ended the day down 0.04%, while on the mainland China, the Shanghai Composite Index ended the day down 0.2%. Let's go to U.S. markets now. U.S. stocks fell sharply on Tuesday to close lower after their President Donald Trump said he was calling off negotiations with Democratic lawmakers on coronavirus relief legislation until after the election. Stocks were higher before the remarks, but reversed course after Trump made the comments on Twitter. The Dow Jones Industrial Average fell 1.35%. The S&P 500 lost 1.41% and the Nasdaq Composite dropped 1.58%. Now, earlier in the session, U.S. Federal Reserve Chair Jerome Powell warned that U.S. economic recovery remained far from complete. Let's take a look at the rest of the markets now. Right, let's get more in the markets. For some analysis, I'm joined by Makwe Masilela from Makwe Fund Managers. Very good afternoon, Makwe. So let's start with that story of US President Donald Trump telling negotiating officials to stop the fiscal stimulus discussion until after he'd won the presidential elections, then changing his mind. Markets are very sensitive to that issue around stimulus. What do you see happening today?
Afternoon to you, yes, it's very confusing. Whether must we just put blame on the medication that Donald is taking or not, we are not for sure. But markets really do not take this nicely. But we need to understand, markets have been going up on the hope that the stimulus will be, an agreement will be reached by U.S. lawmakers. Hence, markets have been going up. So now when you get him saying we must stop or with immediate effect all the talks, that got markets very nervous. And we need to remember that even if he wins, does not mean the next presidential term starts immediately or mid-November. It will start only in 2021. And also very important is just more than 2 months that the other relief has stopped. So meaning for more than 2 months, the U.S. businesses, consumers have been going without the relief. And as we are talking, we've seen that the previous one have managed to help. And now whether this must be now seen as him trying to start the talks again, when we said with immediate effect they must at least continue to give aid to businesses. They must also help passenger airlines and also to give direct checks. So, but the long and short thing is that whether Donald Trump wins or whether Biden wins, it's certain that additional stimulus will be passed. And also, if you take the comments that we got the previous day from the federal U.S. president, stating that the U.S. economy cannot survive and they must make sure that they continue with the stimulus. And the very same thing was also said by the European Central Bank, that they're not too worried about more infections, they're more worried about the physical stimulus coming to a stop. So it's all well and clear to everyone that the markets, the economies, they will definitely need additional stimulus. And the very same thing applies to us back home here. And the markets now are reading beyond that listen, Donald, whether you stop it not here now or what, definitely it has to happen, whether it's going to be through you or through the Democrats.
Let's go to commodities. How do you see those faring today? Last we checked, the gold price had lost some ground, now trading below $1,900 per ounce.
Definitely, that was the immediate reaction or a knee-jerk reaction coming from gold, because immediately what happened after that tweet from Donald Trump, then we saw what we call risk aversion. So people went into the dollar, and we know that a stronger dollar tends to be negative for most commodities as they are priced in dollars. So hence we saw that the likes of gold going down, but now it's recovering and it's up almost 0.4%. because we think it will continue, and also gold continues to benefit from these economic uncertainties. And also remember, a low interest rate environment tends to be favorable when it comes to gold. Hence, we've seen some recovery. And bearing in mind that it did manage to lose almost 2% or so. So there must be some short covering as well that is coming into play.
Okay, Mark, let's take a look at a couple of stocks. Let's start with Datatech. They were out with a profit warning. Tell us more about what they were saying.
Definitely. I mean, this is a company that is in the ICT sector, and it operates in more than 50 countries. And it was more of a mixed bag for them, because you check their technology distribution, the revenue thereof were up nicely 4%. But you check their integrated and managed services, the revenues thereof were down 10%. And Latin America was negatively impacted by foreign exchange moves. And hence, the group itself had a slight drop when it comes to their revenue of almost 1.2%. So going forward, we think maybe the guys will continue to do better.
And Zita, the investment holding company in agricultural related companies, were also out with their half-year results. What were we seeing there?
They expect their headline end profits to grow by almost 65%, and obviously the guys are not paying any interim dividend, but we are not surprised. Remember, in April they gave us a special dividend, totaling to almost 3.9 billion after they sold their stake in Pioneer Food for over 6 billion, and also selling their stake for almost 300 million as well when it comes to Quantum Foods. So given that they're worried about the economic outlook, but they're happy about the climate conditions going forward, they expect the economy to start doing well. But also when it comes to how they evaluate their earnings or their performance, because now there are more of investment holding companies, they have to, the performance depends on the performance of those investments. Before that also used to include the forecast on the earnings of the investees. So now they have to be evaluated differently as an investment holding company. And as we said, the headline earnings grow by almost 65%.
Sure. Now, with global markets so erratic, where are you seeing value in the South Africa Inc. market, or does that remain quite difficult to call?
You know, for a fact that we've seen, especially our property market, the real estate, I mean, down over 52%, the index thereof. I mean, some of the shares that are down over 50%, 40%, and some of the companies, if you check their dividends going forward, they'll be paying you almost R5 a share, the likes of Hyprop. I think maybe it might be worth our while to start re-looking at our commercial or our listed property stocks going forward.
Makwe Masilela from Makwe Fund Managers, thanks so much as always for your time on SABC News. Let's take a look at how African markets and currencies are performing.